Hello, everybody, and thank you for joining me. It's Alan Barry Labucan with the Rocks and Stocks News Show. I'm going to be talking about charts today. I've got some very friendly trends for the metals prices that I want to talk about, and I've got some companies that I want to talk about their stock charts, not just because of what it's showing us as far as where the trends potentially could go, but what has caused a certain movement in their stock price that I think is instructive as well. So let's get started. I'm going to start with gold. And this chart goes back to about 2024, early 2024. And the most immediate thing that I see out of this is basing patterns. So here from, let's say, late April until now, we've had a basing period. And in the last, let's say, since about, well, almost a month ago now, it's gotten into a very tight range. So that coiled spring is really getting tightly coiled now, and I think it's ready for a release to higher prices. And we'll look back in the not that far back to the previous basing period, which was here from November until early January. And then it had a significant breakout. It broke out from, let's say, 2685, got up to as high as 3,500 for a few moments there. Um, Prior to that, you look at this May, almost and a year ago to exactly, to the last long basing period, which was third week in April until let's say early July. So here we are again in that same window where we've got another basing period, and that base was at about 2343, and it ran up to 28 and change before it created another base. Then we go back to early 2024, and it was basing under 2000 or under 2100, and then it had this impressive breakout to 2100 and then set a series of record highs. And this is instructive for the price of gold. When I get to silver next, I'm going to talk about why I think we're seeing something like this period prior to the important breakout above 2100 that happened in early 2024 and then went on to a series of record highs. Fundamentally, the biggest mover of the price of gold is the what I think it is the debt, the death spiral of debt, made worse by the cost of servicing the debt, and ultimately that the fiat currency and the debt system is broken from the top down. And so, really, the only alternative to protect yourself against that broken debt and fiat currency system is gold. And so, the central bankers are seeing that. More investors are seeing that, especially in the East. Although I think that we're starting to see those in the West get more active, the generals get more active in gold. And this base, I think, is our next launch point. This is the basing and coiled spring right in here, especially. This is when I see the base get very, very tight, like it is right now. This is just asking for a reason to go significantly to the upside. And I think that that takes us well past 3,600 in the next 3, 4 weeks or so. All right, let's go to silver now. Okay, so actually, to really get a sense of silver, I'm going to do a monthly chart here that shows the big bull market in, well, the end of the bull market, if you will, in 2011, that had these spikes up here and then, basically traded for under $35 per ounce ever since then. And then it created a nice cup. Now it's coming up the right side of the cup, and I think the it will go beyond $50 before we see a handle, and then up from there. But now I'm going to narrow this down here to the weekly chart. And here again, this emphasizes that the importance of that $35 an ounce breakout that we've recently been having. And even you can see sort of a nested cup handle breakout. And so this is the most important breakout that we've had since the 2001 to 2011 metals bull market. I can go to a daily chart here. And again, this emphasizes, now we're looking at a little over a year, and you can see that, it didn't, it, the resistance was at about $35 an ounce. And back in early June, it had that important breakout above 35. And going back to gold, when gold had hit its important breakout back here above 2100, then it's been making a series of record highs ever since. And that's what I see happening for silver once it breaks above that $50 level. And I think that that's, within this summertime and or before the end of the year. I think in the summertime we're going to see it get well above $40 an ounce, and then we should have some clear sailing to 50. And then once it crosses over 50, which I think will happen this year, I suspect that we'll see a series of record highs. The fundamentals for silver are: one, it's a monetary metal. Secondly, it's crucial to solar panels. And with the price of solar panels going down so much, that is a really important alternative energy source. And I think it's only going to get more important as the price of solar panels keep going down. And that demand that's happened over the last 3 or 4 years for solar panels has caused a deficit between what is annually mined and what is annually in the annual demand. And that's really without silver moving because of its monetary aspect. If both of those things start driving it, which I think is going to happen, that's ultimately what I think will drive it beyond $50 and into new record highs. I think I'll be talking about that more towards the end of the year, and where I see it going from there. First things first, we'll watch for it to bust through $40 an ounce, and then onward and upward from there. Platinum. Platinum has had just a spectacular rally. Let's go back. Let's see if we can see how long this base was. Okay, so back here in 2021, it had peaked at about 1300, made a very long base from basically June, July, summertime of 2021 until recently. But this breakout, this is something that is fundamental. I think that there's going to be, you look to the key sources of where platinum and palladium are coming from, and it looks like they're going to have some supply issues. And, it kind of got left for dead for a long time because, everybody started to believe that the internal combustion engine, its days were numbered and that electric vehicles would take over the world. That's not reality. They're expensive. They take a long time to power up. They don't have the infrastructure with chargers all over wherever you need them. And therefore, I think that they've got some hurdles to keep making, well, to replace the internal combustion engine. And, another thing that I'm seeing a trend in is that the hybrids are seeing a lot of demand for the price and the convenience. And they need a lot of platinum and palladium as well. And so I think that it was left for dead for much too long. It created a super long base, and now it's breaking out in a pretty substantial way. And I'm going to talk about one company later that I think it's being affected by this. All right, copper. Um, Here again, this is a weekly chart. I could go back to the monthly, and it just emphasizes a little bit more fully. So you look at the peak here in the 2001 to 2011 metals bull market, it peaked at about $4.50. And then it went into correction and spent, a significant amount of time down here creating a cup and that an extended handle with a nested cup and handle inside of it, and didn't spend very much time at about above $5. So this recent breakout above $5 to new record highs, although it's been fueled this recent spike. Let me go back here to the weekly so we can see that spike a little bit more. So here again, let's look at this weekly chart that goes back to 2018. You had a run at $5. Well, let's say here, didn't quite get there, got there, fell back, got there, fell back, got there, fell back. And you notice each time it falls back, it's getting less of a fall. So here you saw it fall from 5 down to 320, let's say. This one from 518 to $4. So the falls are getting less severe. And here you see 512 again-ish, down to 435-ish, and now a significant breakout. So here I got my crosshairs at $5, and you can see it touched it once, here, here, and here. But now it's broken out into new record highs. Now I'm going to go to the daily so we can emphasize this spike, and it's held on to a significant amount of its spike. And the spike was because Trump talked about last week putting a 50% tariff on copper imports into the United States. I don't think it's going to hold. I don't think he's going to punish the end users of copper that need that for manufacturing everything, including the cause célèbre, which is lately is artificial intelligence, cryptocurrencies, robots. They're all going to need a lot of copper. And that's not even considering the ancient power grid that needs to be updated and rewired, and it's going to need a lot of copper. So, that's putting a lot of pressure. That would put a lot of pressure on the end users of copper. But a second thing that, although I don't think he's going to continue with this 50% tariff, but you never know, what he did emphasize is just how tight the global supply chain is of copper. Just the talk of a 50% tariff that hasn't even been implemented yet drove copper up into record highs and holding on to a significant amount of that gain. It's not falling back, even though I would say the vast majority of people don't think it's going to hold, that he's not going to go ahead with the 50% tariff. But even still, it's holding that price. And that has a lot to do with the tightness in the supply chain of copper. Evidence of how tight the supply chain is, you can look at the copper, the refiners, and they're having a really hard time getting material to refine. And this tells you a lot about how tight this copper supply is. So when you see this kind of a move based on what is likely not to happen, could happen, but nonetheless, what it emphasizes is the tightness in the supply chain. And so copper has made its important breakout, like going back to gold again. Let's look at gold. This important breakout above 2100 when it started making a series of record highs. I think we're going to see a similar thing happen with copper. The demand is going up, and it's going up because of crypto, artificial intelligence, robots to be coming in the not too distant future. You've got technology that uses a lot of it, rewiring ancient power grids in developed countries, building new power grids in developing countries. The mining industry, the copper mining industry, does not have the capacity to feed that demand, which is why the price of copper has to go a lot higher to incentivize and make lower grade deposits economically viable. Really, to see that happen, I think we need over $10 a pound of per pound of copper, and I think it needs to stay there for a prolonged period of time. So this is very bullish for the copper stocks, the copper miners, the copper mine developers that have high quality projects, the explorers that have important discoveries. All this is very bullish what I see happening with copper. And so we're seeing some very uh, friendly trend for the price of copper and the price of copper stocks. So platinum and palladium, they're kind of a mixed, they're kind of together. They're used for the same thing basically, which is catalytic converters. A lot of times they're produced in the same mines, so they tend to follow a similar path. In fact, I think that the palladium action is probably more bullish and constructive than the I mean, platinum has just gone parabolic, all right, off of a very long base. But palladium has created a very bullish cup and handle here. You notice that the right side of the cup is significantly above the left side of the cup. And when I see this happen, that usually means that the handle is not going to be very long before the next important rally. Let's go back a little bit. Let's look at the weekly chart. So you see here is where it kind of got left for dead here for the last couple years, peaked out at 3,400 in 2022. Let me see. We'll go back to the monthly. So yeah, it's been getting punished for the last couple years after a big slide from its $3,000 level. But this cup and handle, I think, is very bullish. Now, I'm always of the mind that I like to play these metals through the stocks. But the problem with platinum and palladium is there's not very many stocks to choose from. Fortunately, I have one for you to choose or to look at and consider. And that's a good segue to me starting to talk about the stocks now. So let's have a look at Agnico Eagle and bear in mind this context, which is gold. I'll go back to the weekly chart. So you can see from 2020, late 2020 until early 2024, it was basically trading sideways in a long base. And when it started to break out above that base. So you saw one, two, three times it took a charge at 2000. And I actually predicted this. You can go find my predictions that this breakout was going to happen. And why I got confident enough to make that prediction in late 2023 was because I saw it trading at a new base that was above $2,000 an ounce. And I predicted in my reports back here that it was going to break out and we would start to see a series of record highs. You can test me on that by just going to my Substack at rocksandstocks.substack.com to see all my predictions back at this time. Okay, so I just wanted to bring this up so you could see the context of this prolonged period of sideways action in the gold price. And so you see a similar thing happening here with the price of Agnico Eagle. It was from 2021 until early 2024 when I started making it a pick, by the way. It was going sideways at about, let's say, $64 per share. And since then, and by the way, this is on the Toronto Exchange, so this is in Canadian dollars. For my American friends, you just have to look at the New York Stock Exchange and the percentages are the same. So after it based there at about $64 for 3 or 4 years, it had this important breakout along with gold. And it moved from 63, 64, now it's at 163. So it significantly outperformed the price of gold and the GDX. All right. So that's what you want to do when you pick individual companies. I don't believe in diversification where you hunt with the shotgun and you buy massive amounts of companies or indexes because you're gonna be buying good companies, you're gonna be buying bad companies, and you're gonna be buying great companies. Why not focus on the great companies? And it's not difficult to see why Agnico Eagle is a great company. Their cost of production is less than half the price or around half the price of where gold is trading at now. Even going back to that when they broke out, they were still relative to their peers, were still at let's say the low end of their peers for the cost of production. So they're making a lot of money. They had good, strong controls on their cost of producing gold. They were having no problems increasing their production or replacing their production. These are the key factors that you want to look for to differentiate between gold mining companies of different sizes. And so when you looked at their peers like Barrick or Newmont, they couldn't say the same things. And that's why they underperformed quite significantly. So that's what happens when you focus on the best of the best. You get performance that's better than the index and the price of gold. And I will also point out, I'm going to make this a little easier for everybody to see by getting rid of this. So as you can see, just like the price of gold, it's also been basing. And you notice that it's basing just slightly or right at the 50-day moving average. And yet it's still trading significantly above the 200-day moving average. The 200-day moving average is in red and the 50-day is in blue. So it's trading right at its 50-day moving average. Now, the big catalyst in the short term, I talked earlier about the big catalyst for their long-term performance, which I guess you could sort of think about what drives this red line. But what drives this blue line is shorter term catalysts. And the key short-term catalyst that they have coming up is at the end of July, they'll put out their quarterly report. And I think it's going to be a blockbuster. They have been producing gold in the second quarter of 2025 at the highest average price of gold ever. And so you've got a low cost producer and they're producing lots of gold, and it's the highest price they've ever got to sell it at for a quarter. I don't think it's serious arm waving to think that they're going to have a great quarter. And this big move here, quarter after quarter, they were announcing record free cash flow as the price of gold moved up. So this base here is very exciting because of these well, partially because of this technical indicator with it trading right at its 50-day. But with that catalyst immediately ahead of them, I think we see it start breaking out and make a run towards $200 an ounce or per share in Canadian dollars. Okay, so Newmont. Let's bring up Newmont. So let me go back, sorry. During that big run in Agnico Eagle, I put it on the American. Let's go to keep it on the Toronto. During this big run, I was recommending that people that this was the cream of the crop when it came to its immediate peers, such as Newmont and Barrick. And I therefore made it my top pick and never picked Newmont or Barrick. And I'm still not picking Barrick, but in early April, I picked Newmont. Now, this is the New York Stock Exchange listing. So, right here, just before it had its golden cross, and why I gained confidence to make that call was what was happening with the 50-day moving average. But let's go back here a couple years and look at in 2024. They had a good run, but then it petered out and came way back from $58 all the way down to 36 and change. They had some issues with their production and that got it beaten down. So it was a good call to be focusing on Agnico Eagle than it was on Newmont. But what's fundamentally been giving me confidence for Newmont is that they have completely finished the sales. They had planned on selling all of their tier two gold mines, and they completed that sale. They made about 50% more than they had anticipated, and so that's all done. And then they also acquired Newcrest. And whenever one big company buys another big company, it takes a while for them to fully integrate that into a two for one kind of deal. But now they've done that. That's all put to bed, if you will. They're married now and they're one company, Newmont. And another fundamental thing that those two actions did is it enabled them to now focus on optimization of their tier one mines. So when I say optimization, that's bring the cost down, produce more, replace what they're mining, and I think that's the trend they're on now. So when I saw the 50-day moving average turn around, and I predicted that, it's not hard to predict that it was going to go through a golden cross right around here at, let's say, 45-ish is when I picked them. And now they're trading at 58, and they've been trading up since this golden cross, almost all of that time, except for this slight dip here, they've been trading above that 50-day moving average. So what I think you're going to start to see is this red line, the 200-day moving average, will start trending upwards, be sort of pulled up by the 50-day and the current price, we'll start moving that more like this here, where the 200-day bottomed at about 36, and then it started to move up, and now it's at 47. So that's what I think we're going to start to see is this 200-day moving average moving up quite nicely. So that's why I picked Newmont. Another reason I picked Newmont is because when generalist investors think of gold miners, one of the immediate companies that comes to their mind is Newmont or the GDX, the index. And so and Newmont makes up about 12, 13% of that index. So if the Newmont is struggling, it will put some wind in the face of the index. So if Newmont turns its ship around, it will have a positive effect on generalists looking at the gold miners, because you've got those two forces where Newmont, a household name to generalists when they think of gold miners moving up and the index moving up. I call it the Newmont effect. I think the Newmont effect is going to be very bullish for the gold stocks. All right. Now, Alamos Gold is not nearly as well known amongst generalist investors as Agnico Eagle or Newmont, but look at the performance of Alamos, and they were the same time I started featuring picking Alamos back here in the early part of 2024. They were also basing like Agnico Eagle had, and then they had a tremendous breakout. And look at the performance, just like Agnico Eagle. And they've also gone sideways, like Agnico Eagle, and trading right about at their 50-day moving average. Now they're also very, very tight in this range in the basing period. They look like they are ready to have a breakout too. Before I talk about the catalyst, I want to talk about why, like, why not just buy Alamos, or I mean Agnico Eagle and Newmont, and forget about an Alamos. Well, the reason that I'm really bullish on Alamos and think that it could outperform its mid-tier gold mining peers, but possibly could outperform even Agnico Eagle and likely outperform Newmont, is because they've got new mines coming into production that will increase their production. Plus, it will bring their cost of production. They're already at the low end of the average cost of the gold miners, and they're about to bring it down closer to $1,000 per ounce. Now, even if they don't get it there, let's say they get it to $1,200 an ounce or $1,100 an ounce, that's still $400 or $500 an ounce below the average cost of the gold miners. So they're a very low cost producer that is a mid tier that's increasing their production, making tons of money while they're increasing their production, bringing down their cost, and also not having any problems replacing what they mine. So this is for the investor that willing to take on a little bit more risk than an Agnico Eagle. Alamos is a great pick as far as I'm concerned. And so that is the Alamos story. Catalyst. The catalyst that I think will see it break out into beyond this high here of $43 a share is they're also reporting, I think it's the day after Agnico Eagle reports their quarterly report. Alamos will be putting out their quarterly report. And again, here they've been able to sell their gold production. A low cost producer been able to sell their production at the highest average price for the price of gold for a quarter ever. So there again, I think it doesn't take a lot of arm waving to believe that they're going to have a very good quarterly report that will help them break out and see this 50-day moving average and the 200-day moving average continue on this kind of a basis. All right. So there you go. That's the Agnico Eagle. So Orla. Orla has been a company that I started picking before they even put their Camino Rojo project into production. I remember a guy talking to me, well, how come it hasn't gone up? I think I originally started covering it back here about $3. But again, it went sideways for a long time when it was in that development discount window of the Lassonde curve. But then Camino Rojo started producing very well, and they bottomed in late 2023 at $3.46, 3.50 a share. And Camino Rojo was performing well in full commercial production. Then they bought, remember earlier I was talking about Newmont selling its tier two projects. Now, what's a tier two project for a Newmont is a tier one project for a company like Orla. And Orla bought the Musselwhite mine off of Newmont, which was one of the tier two assets of Newmont that they've sold, that they were selling last year. And so since they announced that and Camino Rojo in Mexico was performing very well, it's been, like I said, it bottomed here at about 350 in late 2023, currently trading at $16.14. That's Canadian, by the way, folks. But again, you can look at their American listing and it's going to see similar percentage gains. Now, what I really like about Orla is they're a low-cost producer like an Alamos. So for a mid-tier, you've got a low-cost producer that's increasing their production. They just bought a new mine they bought a mine off of Newmont. They've been active in the mergers and acquisitions. Not only did they buy Musselwhite off of Newmont, but they had also bought a smaller mine in Nevada. And so this profile of their Camino Rojo in Mexico, the Musselwhite, and the project in Nevada, uh, uh, can't remember the name of it at the moment, sorry. That gives them a good profile for years into the future. And so this is a high growth mid tier, and it's been performing very well. So let's kind of put it into context. So, just look at them in 2024. They took a little longer to have their golden cross back here in about April, third week of April. But since then, the stock has been trading significantly above the 50-day moving average for the most of this move since well, even back to here, since the first month of 2024. So my pointer is at January 16th right there, and it's been trading above the 50-day moving average for most of that time period, as they are now. And again, this is a mid tier that's growing its way to being a larger mid tier, while gold is setting new record highs and just had its best quarter ever for a average price during a quarter. So, yeah, here's another mid tier that's firing on all cylinders, and I think they will continue to do that. Okay, now I'm going to go to McEwen Mining. And earlier I talked about my optimism for copper and gold, and I started covering McEwen back here. Let's say it was about $4. And then I think I started interviewing Rob McEwen on my shows way back here when nobody else was talking about the company. Nobody else was, they were actually talking about, is McEwen going to survive? McEwen Mining. Now it's called McEwen Inc. I noticed that stock charts haven't updated that. But what happened here that made this big run was people started to recognize that their Los Azules copper development project in Argentina was a great asset. And what helped people understand how great of an asset it was is that Stellantis and Rio Tinto's venture called Newton put money in a significant amount of money into the private company called McEwen Copper. Now, McEwen Inc. or McEwen Mining, as stock chart still calls them, they own about 46% of the private company McEwen Copper. And Stellantis owns, and I think it's around 16 or 17%. Newton, which is the Rio Tinto venture, owns around 14% or somewhere around there of McEwen Copper. And Rob McEwen himself owns about 12%. And then 46% is held by McEwen Inc. or McEwen Mining, as stock charts calls them. And so I'll talk about the catalyst of why that share structure is important later. So then they had some sideways action. So they were basing here, had another breakout in early 2024. Then they created another base again. And lately they've been on a very significant breakout from around $9, let's say 9.20, 9.30, let's say, on the lows in early 2025. So let's zoom back out here. And so you see they made a triple bottom here. And then they had a significant breakout where the stock price broke above the 50-day moving average, the 200-day moving average, and recently they've had a golden cross. And now they're trading significantly above the 50-day moving average and even further above the 200-day moving average. And so this is recognition. A lot of this move is a combination of two things. One is that copper started to get stronger, and the second is that they recently turned on their or broke ground on their newest gold mine called Stock. So, what McEwen Inc. is their new name is the assets that they have is they're a junior gold miner that produces about 130,000 ounces of gold. And they've got a world-class, one of the top 10 undeveloped copper projects in the world. Harken back to when I talked about the reasons to be bullish on copper. Well, the world needs a lot more high quality copper projects. The Los Azules project is in the top 10 as far as size and grade, and it's in the lowest cost quartile so that makes it a very attractive copper mine that the world needs. So they've got a kind of a two-punch combination there. They give you investors access to gold production and the copper development project that they're moving towards uh, production. Oh, I think they start construction sometime around 2017, 2018, and they'll have it in production in 2030. So while that is happening, they are also increasing their gold production at their junior gold miner, and also bringing down the costs. That's what the stock mine is going to help them to do in 2026 is to increase production. Then they have other assets that will keep that production growing right to the point and beyond of when they can bring the copper project into production. So they got a good growth profile on their gold production and bringing down their costs. Plus, they're doing a lot of exploration on their gold projects, so they're replacing what they mine with future mines, and a couple of those look quite attractive. That they would be very fabulous new mines to put into production, and so those are 2 years or so out. So they got a nice growth profile in their gold production that then leads into their copper production, which will be a free cash flow machine. So McEwen Inc. has a lot of great things going for it, and it's getting a lot of recognition of late. And I think that this is a very bullish trend and one that investors that want exposure to a gold and copper, and you don't want to go down into the explorers or developer total explorers or total developers or small junior gold miners, this is a great pick. And I recently did an interview with Rob McEwen that you can find on my YouTube channel. Just do a search for Rocks and Stocks News on YouTube, or you can go to my Substack at rocksandstocks.substack.com to find that. And in that, Rob McEwen talked about the value proposition for um, McEwen Mining or McEwen Inc. now. And I'm going to go to the just to emphasize these points. When they do sort of a base case, when Rob does a base case analysis of the current value, if you will, of what they have, they are talking about a 17 or $18 valuation. So, and that's in US dollars. That's why I went to the US listing here. So that's significantly above $11. In a more bullish, or not bullish case, but a more representative valuation on what they have and comparing that to similar assets, they are looking at about a $30 valuation. So that's three times the current valuation. So what are the catalysts going forward? Well, as I said earlier, they've started breaking ground on their stock mine, a new mine that's going to be in production in the not too distant future, over the next few months, and then ramping up in 2026. That will help them increase their production and decrease their costs in 2026. They've got lots of exploration going on. I think they're doing about $30 million of exploration in 2025 on their gold projects in Ontario, near the stock mine, by the way, and also in Nevada, near their current Nevada mines. And so they've got a lot of catalysts on the gold side of the business. And then on the copper side of the business, two big things are coming up. One is that they're working on a bankable feasibility study for the Los Azules mine. And so that is going to be out probably within the next 3, 4 weeks. And it will give the highest confidence numbers that they're at the level that bankers will lend you money when you have a feasibility study. And so it's got all the key studies, the economic studies done on it. And so that's coming up in the next few weeks. And then also they're looking at taking McEwen Copper public. Now, I'm extremely bullish about McEwen Copper going public because As I said earlier, when I talked about the share structure and who owns McEwen Copper, you've got Stellantis owning a big chunk. You got Rio Tinto Ventures, Rio Tinto's venture called Newton owns a big chunk, and Rob McEwen owns a big chunk. So those three combined own like 40 some percent. The other 46% is owned by McEwen Inc. So there's really no stock float out there for when they go public. Now, of course, they'll issue some stock to take it public and raise some money when they do that, but the valuation should be very high. And I think their last financing on McEwen Copper was at like about $30 a share of McEwen Copper as a private company. So, you could be talking, well, let's just say above that price. Putting that also into context, I think it should be an easy sale for Wall Street because the amount of new listings has been quite down for a long time now. And so that's how investment bankers make their money is with new listings. So there's that going for it as well. And to reflect on that, a company just went public today on the NASDAQ, and it's a gold and copper miner, and it was really well received. So I think that that tells you that there's a good appetite in America for copper assets because that is a gold and copper producer. And so I'm very optimistic about McEwen Copper going public because then when investors are evaluating a McEwen Inc., they can say, well, okay, McEwen Copper is trading at this price, and we own 46% of them. And I honestly believe that that company their 46% interest in that McEwen Copper as a public company will be worth significantly more than the current valuation of McEwen Inc. with everything in it. And so I'm very bullish on McEwen Inc. MUX is their stock symbol on Toronto as well as the New York Stock Exchange. And so, like I said, if you're interested in a copper and gold company, McEwen Inc. is a good one for you to look at. All righty. Okay, so now I'm going to go down the food chain a little bit and I'm going to go to Amex. Amex Exploration. I am very bullish on this company because, okay, let's go back here and look. You see this big drop here. The reason for that big drop was the company put out a resource estimate of how much gold they had found at their various properties. And I think the market anticipated that it would be significantly larger than it turned out to be. And that disappointment basically cut the price of the stock in half. Well, half at the ultimate low, if you will, from the ultimate peak just prior to it. So the reason that not all resource estimates are created equal, there's something that is called an inferred resource. So this is your lowest category of a resource estimate. Uh, it has wider spaced holes. It is doesn't have the same confidence level as a measured and indicated resource. Now, when you constrain it to indicated to put out a resource, you do that because you want to put out a preliminary economic assessment. You can't do a preliminary economic assessment if it's all inferred, right? So they had planned to very quickly after putting out their resource estimate to put out a preliminary economic assessment, which happened around here. And so the stock got hammered. It had a rally when they put out the preliminary economic assessment, and then it drifted downwards, okay, to this ultimate yearly low here at 80 cents. And it's been on the upswing ever since. So you need to understand what happened in the past and what's happening now to sort of look where it could go in the future. So uh, the reason that it what they started to talk about was around this low here was that they also did an updated resource estimate. And in the updated resource estimate, they saw a significant increase in the amount of gold in their resources, plus they increased the amount of ounces in the measured and indicated category. Plus, when they did that, they got a big boost in the average grade of their resources. Now, often when you convert from an inferred to a measured and indicated, you don't see a big bump in the ounces and a big bump in the grade. And it's very rare, actually. And that's what happened to the company. So it's been on a much more bullish move ever since then. Now, some other important factors are happening as we speak as well that the company's been communicating in their interviews is that they are planning to do a permit application to take a bulk sample from what's called their Champagne zone. So at their Champagne zone, they've got about 900,000 ounces of gold with an average grade of 16.2 grams per ton of gold. So you're talking about 900,000 ounces or 900,000 ounces at an average grade of about a half an ounce per ton. There's not a lot of half ounce per ton resources out there these days. Let me tell you, I'm always looking, but these guys have one, and they've got about another 180-ish thousand ounces in the inferred category still, and that has an average grade of 9.9 and change, almost 10 grams. So that inferred looks very good as well. And so they'll continue to drill into that inferred resource and bring it up into the measured and indicated. And I'm keeping my fingers crossed that they'll also see a bump in the grade on that because you're doing higher density drilling. So you have more data. And in these high grade systems, the more data you have, the better it is to get a representative grade. Okay. And another thing they're talking about in their interviews is that they're doing a preliminary economic assessment on that Champagne zone alone as a toll milling operation. So they would mine the material out of the Champagne zone and send it to a nearby mill and have it processed there. And they're doing a preliminary economic assessment to assess the economics of doing that kind of operation. And the goal beyond that initial period of toll milling, they would then use the profit from that to build their own mill on the Perron project in Quebec. So that's what they're working on. That's what their catalysts are for growth coming in the near term. So that's the Amex story. All right. Now I'm going to go to Generation Mining. So earlier I talked about my optimism for the price of copper and the price of platinum and palladium. And you notice that they've had a nice cup and handle. And what has been helping this out is a combination of the bullish move in the price of copper and the prices of platinum and palladium. So they've got a copper, it's mainly a copper and palladium development project that has all of its permits now. That recently happened. And so it's shovel ready now, and it's in Ontario, and it has the Trans-Canada Highway going through it, power going through it, and it's only 10 kilometers from the town of Marathon. There's a lot of Canada is talking about helping these kind of projects. Well, you really couldn't put a copper palladium with platinum kicker mine shovel ready in a better place than what Generation Mining has at their project near the town of Marathon, Ontario. Uh, and you're talking about a significant amount of copper production. I think it would be 42 million pounds. Don't quote me on that annually. Just go to their corporate presentation. I'm going off my memory. I think their palladium production is about 150,000 ounces, and their platinum production would be about, I think, 30,000 ounces, somewhere in there. And the project in their 2025 a feasibility study has a 30% or 29 and change IRR, internal rate of return, and the payback is about 2.5 years of production to pay back the capital cost to put it into production. So it has very good statistics, excellent infrastructure. I mean, people could literally take a bus from the town of Marathon out to the project to go to work. You don't have to build a camp out in the middle of nowhere. So it's got a lot of great fundamentals to this, let's say, copper palladium project with platinum kicker. So earlier, when I was talking about palladium and platinum, and also talking about that, when I am bullish on a metal, I try to find a company to have exposure to that metal, or in this case, metals. And there just aren't very many copper development or platinum and palladium development projects anywhere in the world, especially one that has a significant copper element to its mix of what it will produce. And so you've kind of got the best of the copper and platinum and palladium world all wrapped up into a small company that has a great looking future ahead of it. And I think that future will be as a future miner of a significant amount of copper, palladium, and platinum. And so, as you can see, it bottomed down here at about 11 cents a share, firmed up, broke out, had a golden cross, is currently trading significantly above the 50-day moving average and the 200-day moving average. The 50-day moving average is at a very steep trajectory, which I always find very bullish in technical analysis. And so, again, if investors want to invest in a company that has copper, platinum, and palladium, there really aren't very many. And if you start, filtering for tier one jurisdictions and tier one infrastructure, that list is falling down to, well, Generation Mining is kind of the only show in town. So that's one I think you should do your homework on. And I'm working on getting another interview with two of their key people. Recently, I did an interview with Jamie Levy, who's the CEO. You can find that on my YouTube channel at Rocks and Stocks News. Do a search for that on YouTube, or you can also find it on my Substack at rocksandstocks.substack.com. Alrighty. I think I've got one, two, three more for you. All right, Vizsla. I am a huge fan of Vizsla Silver because they have one of the best development projects for any metal anywhere in the world. You can see back here in early 2024, they were trading at about $1.45. Currently, they're trading at 441. What makes this exceptional story is that they have done a preliminary economic assessment with peer envying numbers, if you will. Their internal rate of return using much lower gold and silver prices has an IRR of 85%. Now, if you use current prices, which are significantly above that base case in their preliminary economic assessment, and the IRR goes over 100%. And the capex is only about 225 million US, and at current prices, the payback of that capex is less than 6 months. In addition to that, the company currently has approximately $200 million of cash in the bank. So they pretty much got their capex costs looked after. So what they're working on now is they're working on the permits to bring it into production. And also they've started trial mining, and they're going to be putting that material, stockpiling that material so that when they do get into production, sometimes one of the wrinkles of a new mine is that you're pulling rock out of the ground and you're bringing it to the mill. And sometimes when you're ramping that up, you can have issues. So in their case, they're taking material already and stockpiling that. So then that material will go into the mill once they start putting the mine into production. So what makes this so special? Why do they have $200 million in the treasury? Why are they trading at a billion to 1.2 billion? Well, it's the dynamics or the features of the mine or of the discovery that they have. It's high grade, it's low cost to produce it. I think their costs are going to be about $12 an ounce. All that's silver equivalent because it's a combination of gold and silver. But if you use the silver equivalent number, it's significantly lower than the price of silver. And so, and another very positive thing is that it has a low capex, low cost to build it. Most mines these days are, a half a billion to a billion plus. So to have a high IRR or high margin project with a low capex is very unique these days. There's not a lot of those out there. And that's why they command a premium. And there's not very many really high quality uh, silver development projects in the pipeline. So that makes them unique on that front as well. And so, yeah, they've got a great profile looking out. They benefit from silver and gold going up in value, plus all the fundamental developments that they're working on. And to me, they're the premier silver development company in the business. In fact, I spent a fair bit of my time in the past before I got into the mining world in the technology, and there's a saying that they call the big successes in technology, they call them unicorns. Facebook would be a unicorn, Microsoft would be a unicorn, Apple would be a unicorn. So that's how they call those companies with phenomenal success. And I think of I think that Vizsla will prove to be a silver unicorn. So that's the way I look at Vizsla. All right, now Goliath. Okay, so Goliath is my highest conviction gold explorer with an important discovery. I originally started featuring the company back when they were about 60 cents. So I think it was back here in 2021. You'll have to check on my Substack to test me on that one. But they were having good success, especially since they bottomed in 2023 and have been on a nice trend ever since. This big move here was because they announced very good results. The move was based on the best drill hole they ever had at their Sherbet discovery in the Golden Triangle of British Columbia. And since since they bottomed since they hit this dollar level in late 2024, they've been doing very well, and they closed today at $2.38. So let me zoom in a little bit more here, and you notice this move here. And this move from here to here is the optimism of their 2025 season starting out. And that basically started back here sometime in June. And since they've been started their 2025 season, they've had some very good news out because they found that they had some rock that is called a reduced intrusion related gold dike. Okay. And in the Golden Triangle, the age of these kind of dikes was considered they're Eocene in age, which means they're about 50 million years old. The researchers, the explorers didn't think that this age of dikes was prospective for gold. But back in 2024, they had seen all the success that was happening with Snowline Gold, who had a reduced intrusion related gold system up in the Yukon. And so they saw, well, we got reduced intrusion related gold dike here, or reduced intrusion related dike. They didn't know if it had gold in it then, but they did some assays and found out that in fact had gold and visible gold and high grade gold. So they only did the assays in 2024 on a couple of holes. And they also had a study done at the Colorado School of Mines that did use these high-powered microscopes that give you an ability to look inside the rock at the gold inside the core. And they found that there was an interesting thing happening where the flat-lying veins that they had, uh, they also had these vertical reduced intrusion related gold dikes, and there were some points where they cross-cut. And they did an analysis of this, and they found that there was two styles of gold, one in the reduced intrusion related gold dike and one in the vein. One had a hotter source and one had a cooler. And yet, in this, what they're one of the members of the team at Colorado School of Mines called Randall Karcher, he calls it the Goldilocks zones. And I love that name because it is just right to have the vertical dikes and the flat-lying veins have two sources of enrichment in these Goldilocks zones. And there are a massive amounts of locations where the vertical reduced intrusion related gold dikes cross-cut the veins that are gently dipping. And I was talking about this as being my highest conviction uh, gold explorer with an important discovery, just because of the stacked veins that they had, because it looks geologically like one of America's greatest gold mines, which was called the Pogo mine in Alaska. It is also a gently dipping stacked vein system. So I thought, there's an analog there to Pogo just on its own. And then along came these reduced intrusion related dikes. And so now you've got the potential that the reduced intrusion related gold dikes could be important as potential mines on their own. The same can be said for the flat-lying stacked veins. And then you've got the Goldilocks is where they cross-cut. So then recently so when they found all this out and did all these studies, they realized, wow, when we start the 2025 season, we got to go back and relog all the core that didn't think was important because of the previous research that had been done and thoughts about these Eocene aged reduced intrusion related dikes. Um, um, they didn't do the detailed logging of those. So they went back, and lo and behold, they started seeing visible gold in those RIRG dikes, those vertical dikes that come up. So they sent those off for assaying, and then they also saw a third rock package that is what's called a altered breccia. And it's different than the veins, the stacked veins. It's different than the vertical dikes. And it has visible gold in it as well with high grade assay results. So this is getting very exciting because you've got three rock packages. They're all carrying high grade gold. This is indicative of a very powerful gold mineralizing system that drove the fluids up into those various rock packages. And if it's high grade where it got driven to, the chances are it's high grade where it came from. All right. Now, in their recent news release, when they announced the assay results back from that third rock package, Quinton Henney, who is is the advisor to technical advisor to a fund that owns a bunch of stock in Goliath, and he made a quote in that news release, and he talked about how this altered breccia is often on the edges of a intrusion or the magmatic event that caused this mineralization. So very good chance that just below the valley floor, because all of these things I've been talking about are in a mountain, coming down the mountain. And at the almost at the bottom of the mountain is where they found that third rock package. And so there's a very good chance that just under the valley floor is the magmatic intrusion that caused all of this gold mineralization to make its way up into what now is three separate rock packages. So I think you can get the excitement as to why they're my highest conviction gold explorer with an important discovery. And they're drilling right now with 9 drill rigs, and they're just pounding away at the holes. They got assay results coming back from the new drilling. They got assay results coming back from the relogging. They got assay results coming back from the vertical reduced intrusion related gold dikes, and now also in this altered breccia as well. So end of story. They're going to be having a lot of catalysts coming up, and I think that's why you've seen this very positive move since the lows of April, and they're just getting started with their 2025 season. And with all the geological studies they've done and all the data they have from their drill holes, they're going into this season that just started a few weeks ago, this drilling season that just started a few weeks ago, armed with the most data they've ever had. And so I think that this is going to be significantly, by far, their best drilling season ever. And 2024 was a great season. So I think they're going to up the ante in 2025. All right. So I want to go to the last company here. And I have just started to cover this company. Well, it's kind of a recovering of the company called Norsemont Mining. Uh, so my long-term readers and viewers will remember the name Norsemont because I picked it really early in their success. I think they were around 25 or 35 cents. They ended up getting bought out for a $500 million. They were a big, I call them in my personal Hall of Fame, mining Hall of Fame. And so then they this is sort of Norsemont 2.0. And notice that it's had a cup here and is significantly above the left side of the cup. And what's really been responsible for this big move is something that I've been harping on companies to do for a long time, which is to get into the digital marketing arena and tell their story. And so they've been doing that lately. And look at the benefits of what happens. Now, bear in mind that they have a really great project. It's got a couple million ounces of gold in oxides at the surface that they envision being an open pit mine. They've also hit the porphyry, that these epithermal veins that cause that oxide deposit come from. They haven't drilled into the boiling zone of the epithermal vein that comes off these porphyries, but they have, looks like they've drilled into or clipped a porphyry in one or two of their previous holes. So what it looks like is that they have the entire model of a porphyry heat engine, a epithermal veins coming off of that porphyry, and at the top you have the oxides. They're low grade, but for an oxide deposit, it's actually pretty high, in a good spot for a oxide deposit. Now, the beauty oxide deposits, and a lot of the great mines in Nevada are oxide deposits. They're also low grade, but you process 25, 30,000 tons and your cost is very, very low, and you make a lot of money because you can process a lot of ounces by moving 25, 30,000 tons a day. All right. So it looks like they've clipped a porphyry, so the heat engine. They've got the oxides. The drilling to find the rest of the veins that lead you from the oxides to the porphyry have not been drilled for even yet. Okay, so I think there's pretty good chance they're there. If it walks like a duck and talks like a duck, it's usually a duck. So they've got that really great project going for them. But they were kind of an undiscovered gem, and then they started to tell their story. They started to use digital marketing. All of a sudden, look at here, they were down to next to nothing as far as volume. And lately, look at how much significantly it's improved its volume and the price is going up. This is the value, folks, of companies using digital marketing to get their story out there. It kind of annoys me that a lot of companies these days are what I call stuck in the fax machine era. They think that just magically people are going to be able to find out about them, and they don't even use digital marketing. They don't go on Twitter. They don't go on other social media sites. They don't do much in the way of YouTube interviews and content, and they think they're going to be found. Well, that's not the way the world works these days. Investors are online. They're on social media sites. They're on YouTube. They're on Twitter or X now, as it's called. And they're looking for investment opportunities. But if you're not telling your story on those forums, how are they going to find you? Okay. Now, the other benefit of using digital marketing is these investors that are out there looking for investment opportunities, they also have their own networks of like-minded people that are also looking for that. So they become your marketing arm, and it's really inexpensive. There's no excuse for companies not to be using digital marketing these days. If they're not, they're stuck in the fax machine era, and that make is potentially going to make their cost of capital higher, lower volume, lower stock valuations. It's really inexcusable these days. And so, but I wanted to highlight Norsemont. Well, one, because it's a blast from the past. That's a great memory. The name Norsemont and the potential that they could have a Norsemont 2.0, and it might even be more significant than Norsemont 1.0, what they have on their project. But I also wanted to highlight them for this breakout that has happened because they're using digital marketing tools to get their story out there. They have a good story to tell, and now they're using the digital marketing tools to tell it. And just coincidentally, look at in these last couple weeks when they've got on some, well, they came on my show, they went on others, and look at the volume increase. So you go way back here to, well, keep going. You keep going, and you got to go way back to here in 2021 since they had all that volume. And now they're coming to life. The stock's moving up, the volume's increasing, and that's the benefit of using digital marketing tools when you have a good story to tell. I implore companies these days to get your get act together when it comes to digital marketing. All these companies talk about, well, we're working for our shareholders. Well, if you're not doing digital marketing and telling your story, what work are you doing for your shareholders? Here's a perfect example of why it's worth the effort, especially when you just have to hit enter on your computer and go on a video and spend a half an hour, 45 minutes talking about your company with somebody that has a good audience that's interested in these kind of companies, or go on X and make some posts. It doesn't take much effort. All righty. So that's the end of my rant on the difference between the fax machine area and jumping into the digital marketing world when you got a great story like Norsemont does. Do your homework. I'm going to be covering this company a lot. I really have a high opinion about the guy running the company, his team, and the project that they have. Alrighty, folks. So there you go. That's my trends, friendly trends for mining stocks. Do your homework, speak with your financial advisors. I talked about McEwen Mining that I'm a shareholder of. Let me get this off the stop share here. So I talked about McEwen Mining. I'm a shareholder of McEwen Mining. I talked about Amex. They're a sponsor of my reports. I talked about Vizsla. They're also a sponsor of my reports. That's all the disclosure I have. Whether they're a sponsor or not a sponsor, um, keep in mind that I'm biased. I'm biased about every company I follow, every call I make, every trend I notice, because I want to be right. That's my ultimate bias. But some companies pay me to support my work, and so I put out content, and I put out content about them for their benefit. But I also have to thank them on behalf of my audience because it enables me to do my reports and not charge the audience to see those reports. And so I'm very thankful to those sponsors. But bear in mind that I've been doing this for 30 years. They don't pay me to have a positive opinion. They're a sponsor because I have a positive opinion on them, but my opinions on sponsors and non-sponsors are the same. It has to go through my filter, and my filter's been built up because I've had great mentors in geology, geophysics, geochemistry, and ultimately they got to go through that filter whether they're a sponsor or not a sponsor. But I thought I better give you all my disclaimers there so you know my biases. On that note, have a great day. We'll talk to you soon.